Hello and welcome to Wake Up and Smell the Mic Q's review for Friday, June 30th, 2023. It's now the 29th, 8:15 p.m. We start off in the daily Q's chart looking back to the October low. I'll zoom into the current area now. And price kind of stayed in between the sell risk levels, phantom and variable combo, and then the strict combo version up here. So now these sell risk levels, phantom and variable combo, aggressive and variable aggressive combo, can become qualified with a close above this close on the 29th for end of day on the 30th. Keep going and get above the strict combo disqualified sell risk level and possibly the aggressive and variable aggressive sequential sell risk levels, and these become qualified with closes above either one of them or both of them. And price really came nowhere near the disqualified propulsion momentum down levels for 50% or 100%, and pretty much closed right on top of the momentum up over here. So I'll close above the disqualified momentum up levels for 50% and 100% tomorrow. End of day on the 30th will qualify those levels, and that means the 50% and 100% exhaustion ups will be qualified. And the ATM fast trigger up is poised to get above its oversold 25 line there, and once that happens it goes quite quickly to the overbought line 75 and get above that. So that's why they call it the fast trigger. The slow trigger did close below the overbought 75 line, but it's really not making too much headway to the downside, so that could easily turn around and get back above that and meet the fast trigger up above the overbought line. And the REI buy signal became a little bit more solidified with a move further above the oversold negative 40 line, closed at positive 9.73 for REI. DM1 is still above its overbought line. However, ROC did go below its overbought line. It's a little bit concerning, but could easily go back above it with a nice up move tomorrow. And the DMI plus is still well above the DMI minus, and they're straightening out so they don't have that tendency to move away from each other, so we'll have to keep an eye on that. And price could not close above the conversion line. There was a close 363.81, conversion line 365.22. And in the aftermarket for the Qs at around 8:24 p.m. Central Time on the 29th, it's at 364.76, so in the aftermarket hours it stayed below that conversion line, so it's got something to try to get above for tomorrow morning. And it can't get above the conversion line and heads south. The mid-band of the Bollinger Band, which is a 39 simple moving average, is there at that level, and right underneath it is an ongoing demand line with a close below that level would qualify the demand line. And there's a qualified demand projection under that from this qualified demand line back here. So that could stop the downdraft there. If not, it could bounce off of the channel 3 low and or the Stark band. And here's the XLK to QTEC relative performance ratio. See the previous video for more explanation on this ratio to be used for a possible pair trade. So I moved the upper fork and the lower fork back to this downdraft here, which means that the QTEC was outperforming XLK, so I think that's the semiconductors outperforming, and then when there's profit taking and the likes of that, and then the XLK kicks in there. But you can see it hit the top of the Andrews pitchfork here, and then semiconductors took over again, and now we're back to the XLK after a little dip where the QTEC outperformed the XLK. And if you're lucky to have Stock Charts Relative Rotation Graph by Julius de Kempener, you can use the XLK and QTEC and benchmark it against the Qs, and this is a very interesting combination. So the XLK and the QTEC have exactly the same instruments inside of it, and the QTEC is equal weighted and the XLK is cap weighted. Then if you benchmark it against the Qs, which has everything that the XLK and the QTEC has inside of it, plus another 76 or so that aren't in the XLK and the QTEC, then you're measuring the performance of the XLK and the QTEC not only against each other, but against all the rest of the stocks other than what's in the XLK and QTEC from the Qs. So that's been interesting to watch that. I put it on a 5-minute chart and check it every once in a while. And you can look at it in investing.com here and put the NDXT in there. Yeah, there it is there. NASDAQ 100 technology sector, NDXT, the equal weight. And you can see all of the instruments inside of it. I lost count. I think I counted a few weeks ago, and there's 34 or 36. But nonetheless, you can go in there and see what the chips are doing against other things like Alphabet, Adobe, and Microsoft, Apple, and some of the security instruments, and some software in there too. The Texas Pacific Land Trust, TPL. This is the overlap indicator chart. I'll zoom into the current area now. So the TPL printed the sequential cell setup 2 count, and to negate that for end of day on the 30th, there must be a close below 1298.47 for the price flip to the buy setup count 1. Another good thing that happened is that price closed at 1315.51, and the differential level up is at 1315.06, so it closed above that, and the level down, which is at 1314.60, and by closing above both of them like that and not below it, so they were really close together, 1315 and 1314. If price would have closed below those two levels, then a differential down will have printed, and that would not be a good thing. You can see this one closed under both of the differential up and the differential down, and that's the level down and level up. It closed below both of them and got a differential down print. And it's hard to see as I used light colors for these moving averages, but that moving average 3 is the 20 simple moving average, and the moving average 5 in red is the 35 simple moving average. So the 20 is just slightly below the 35, and if that 20 gets above the 35 in red, that would be a very good sign. Then the next goal would be for the 20 in blue to get above the 50 here, moving average number 4, and that would change the rainbow pattern from down to up once the red gets above the 50 eventually, and that's a long way off more than likely. But you can see over here the 20 is below the 35 in red, and the 35 in red is well below the 50 yellow. So they're getting close together, and that would be a very good sign just to have the 20 go above the 35 in red. And like many other instruments and ETFs, the price must get above the Ichimoku conversion line, 1324.84, and there was a high that nailed it, 1326.42. So just a couple of dollars more than the conversion line, but it was just too much. It bounced off of it and headed down. Had a darn good close though, 1315.51. And volume is still atrocious. Look at that, 1,366. But that could be an institutional buying 1,000 or so or more, or maybe all of it. I don't know. So there is some other daring traders and investors seeing the opportunity here. You can see the fast trigger ATM went above the oversold 25 line. So next the slow trigger needs to get above that oversold 25 line, and that would be another good indication. And the pressure up, which is at the bottom at -2, needs to try to lift off again like it tried to over here. You can see it went up to positive 3.67 and then just came back down and settled back here in the abyss. So it's not that far away from lifting off again, and the next time could be the one that follows the slow trigger and fast trigger up to the overbought line possibly. Again, it seems like light years away.